Okay, so guys, next title that we have in cash flow statement is accrued interest on investment. I hope you can hear me and can see the screen, right?
Yes, sir.
So interest that becomes due but is not received. Interest that becomes due on an investment but not received is called accrued interest. We have made some investment. Let's say we have made investment in fixed deposits or in any debt instruments like debentures of any company or even in government securities where we would be earning interest on regular basis at a fixed interval. Now that interest has become due but has not been received till the date of balance sheet. So in balance sheet that interest would be presented as accrued interest. The same interest that belongs to that particular accounting year would also be shown as an income in our statement of P&L. As a current asset, right? So I hope you all have understood what accrued interest on investment means here, right? Abhi, Rana, Taman, have you all understood this?
Yes.
Yes, sir.
Okay, so guys, let's take one example of it. Example number 14. Following is the extract of balance sheets of Ambuja Limited. Okay, so from the following extracts of balance sheets of Ambuja Limited and additional information show how will you incorporate the relevant information in cash flow statement for the year ended 31st March 2025. Right? So your company Ambuja Limited has invested in 6% debentures of Asian Paints Limited. This is non-current investment of Ambuja Limited. By the end of accounting year 23-24, the balance of debentures was 3 lakhs, and by the end of accounting year 24-25, the balance is 5 lakhs. Of the accounting year 24-25 is rupees 8 lakh 65,000. In asset side, you have one more information, that is accrued interest on 6% debentures of Asian Paints Limited. So this is the balance. These are the balances of accrued interest on these 6% debentures of Asian Paints Limited on these two dates. In additional information, you have been given information about profit before tax and the additional debentures of Asian Paints Limited were purchased on 1st August 2024. This information is also given to you. With this, you have to show the relevant information in cash flow statement of Ambuja Limited for the year ending on 31st March 2025. Have you understood this much, guys, or not? Taman, Abir, and Ana, any
Yes.
doubt in this?
Yes, sir.
Okay. So now its solution. We will first calculate in the working notes what is the interest earned by Ambuja Limited for the year 2024-25. So interest earned on 6% debentures of Asian Paints Limited during the year 2024-25 is, at the beginning of accounting year 24-25, we had debentures of rupees 3 lakhs coming from the previous year, and they carry interest at the rate of 6%. So on 3 lakhs at the rate of 6% for a period of 4 months, that is from 1st April 2024 till 1st August 2024. Because on 1st August 2024, the total amount of debentures has changed. So on this 3 lakhs, we will calculate interest for first 4 months, that is April, May, June, and July. And on the remaining debentures on 1st August, now the total amount of debentures is 5 lakhs because we have purchased additional debentures of rupees 2 lakhs. So now for the remaining 8 months of accounting year 24-25, Ambuja Limited should earn interest at the rate of 6% for the remaining 8 months of accounting year 24-25. So 6% for 8 months. This is how we will get total amount of interest for the accounting year 24-25. And this comes to 18,000 divided by 3, that is 6,000 plus 30,000 into 2 by 3, that is 20,000. Means total interest earned on these 6% debentures by Ambuja Limited for the year 24-25 is rupees 26,000. However, amount of interest actually received during the year 24-25 is, we by the end of previous year, we yet had to collect 12,000 as interest from Asian Paints. So that 12,000 I have mentioned here. Plus, during the year 24-25, we have earned interest of 26,000. So total interest that we should have received during the year 24-25 from Paints Limited is 38,000. But we found that at the end of the year, there is still accrued interest, that is recoverable interest of 8,000. It means out of 38,000, we could receive or recover only 30,000. So this is the amount of interest that we have received in money form from Asian Paints Limited during 24-25. Clear, guys, or not?
Yes.
Abir and Taman, have you understood this?
Yes, sir. Yes, sir.
Good. So now we will show this information in cash flow statement for the year ending on 31st March 2025. We already have been given profit before tax, that is rupees 8,65,000. So that I will write here. The interest earned on 6% debentures is non-operating income because it is investment income. But since this has gone to statement of P&L and has increased the profits, now this amount we will subtract from profit before tax. So here we will have less interest on debentures, or interest earned on 6% debentures of Ambuja Limited. Sorry, Asian Paints Limited. And its amount is 26,000. So this we will subtract. We do not have any other information to be presented in cash flow statement. So the other information which I copied from the previous question would be deleted from here. Now, from cash flow from investing activities, we will first write here purchase of 6% debentures of Asian Paints Limited, and that is rupees 2 lakhs. It is an outflow of cash. From 3 lakhs, debentures have become 5 lakhs. It means we have purchased additional debentures of rupees 2 lakhs. And on these debentures, the interest that we have received during the year 24-25 is 30,000. So that also would be part of cash flow from investing activities. So interest received on 6% debentures of Asian Paints Limited is 30,000. And this is inflow of cash. And this is the end of our solution, guys. This is what we have to present. Am I clear?
Yes, sir.
Yes.
Okay. Even though this is an item of current assets, but in working capital changes, we will not consider that here. Why? Because this item of current asset is not operating item, but this is investing item. Had this been operating item, let's say here we had accrued commission, then the changes in the amount of commission we would have taken here as well as part of working capital changes. So what you should notice, guys, here is that, and should keep in mind is that any non-operating item that is part of current assets or current liabilities that you will not consider while determining cash flow from operating activities as working capital item. I hope you have understood, guys. Right?
Yes.
So now you can start noting it down from here in case you have no question. Abir, have you noted down this also? Abir,
Yes, sir.
Yes, sir.
complete this, guys. Guys, you should not write this. And this was copied from the previous question. Yeah, this is how it should be. So, guys, now note down example 15 from here. Be Rakshita and Taman, how much of this you have noted down?
On the last. Done, sir.
The current payable, sir.
Sorry, other current liabilities. Rakshita?
Yes, yes, sir.
Okay. Abir, I'm asking what is left, or you are done with
Am I
this?
audible?
Yes, yes, Abir.
Sir, completed.
Okay, okay. Note down this also, guys. It is for reserves and surplus. There is no note for. Okay, 1 second. 1, 2. Intangible asset. Okay, guys, do it like this. This is note number one actually. This is note number two, and this is note number three. So for share capital, we do not have any note. I hope you have done the changes, guys, here, right? In the note numbers.
Yes, sir.
Yes.
Okay.
Yes, sir.
Now complete this, guys. So, guys, have you all noted down this?
Yes, sir.
Yes, sir.
Okay, so here, guys, in this question, we have many information. Here, share capital is increasing by exactly rupees 1 lakh. And the question says that capital was issued for purchase of goodwill. So if you see, goodwill is also increasing by 1 lakh. Means neither there is any inflow of cash on account of issue of shares, nor there is any outflow of cash on account of purchase of goodwill. So both these information would not be presented in cash flow statement at all, because they have not caused any flow of cash at all. Right? So we will prepare working notes for other things. The second item here is reserve and surplus, for which we have been given note number one. This is the note number one of reserve and surplus. General reserve has decreased rather than increasing by 25,000. Capital reserve has increased by 22,000, and balance in statement of P&L has negative balances on both the dates, 31st March 2018 and 31st March 2019. Right? You know that when balance in general reserve increases in a year from the previous year, it means that much increase has been transferred from the current year's profit to general reserve. Similarly, when general reserve balance decreases, it means the amount of decrease has been transferred from general reserve to statement of profit and loss. Right? So, in a statement, when we prepare P&L appropriation for a company as a part of reserve and surplus, which I showed you earlier, yeah, determination of profit before tax. I showed you how appropriation of profits is presented as part of notes to accounts of reserves and surplus very initially when I started with this chapter. So there, what do we do? We take balance in a statement of P&L as coming from the previous year, means balance in statement of P&L as at the beginning of the year for which we have to prepare cash flow statement. To this we add current year's net profit, and from the sum total of this we subtract dividend and transfer to reserves, right? But here we may have also transfer from reserves. So if there is a case of transfer from reserves, then this profit, this 192 will increase, and that would be added here. Okay, suppose Balance in statement of P&L as at 31st March 2023 is 10,000 negative. Profit for the year is, let's say, 8,000. So with this too, we will have negative balance of 2,000. But suppose we want to distribute profits. Suppose we want to distribute profits, let's say of 5,000. And in our general reserve, at the beginning of the year, we have, let's say, balance of 25,000. We have balance of 25,000. Then what do we do? From general reserve, we transfer some profit here. In that case, we will write here add transfer from general reserve. Let's say we have transferred rupees 10,000 from general reserve. So now profits available for appropriation is 8,000. That is minus 10 plus 8,000 plus 10,000 is 8,000. This one. Right? And then the company distributed or appropriated profits of, let's say, 12,000. This is the only appropriation company has done. So with this, now the closing balance in statement of P&L is negative 4,000. Here we will write not add transfer from P&L, but here we will have less transfer to profit and loss. How much we have transferred to profit and loss? Rupees 10,000. So 10,000 we will subtract from here, from general reserve. And with this now the net balance of general reserve as at 31st March 2024 is 25 minus 10, that is 15,000. Let's say there is no debenture redemption reserve. So with this total of reserves and surplus is positive 11,000. So what we have done guys here, balance in statement of P&L at the beginning of the year is 10,000, which was in negative. Profit for the year were 8,000. So since both these together are giving us negative amount, that is why we transferred some profit from general reserve. So we took out this 10,000 from general reserve. So now the profits available are 8,000. We appropriated dividend of 12,000. So 8 minus 12 is minus 4. And here reserve has decreased by 10. So now its balance at the end of the year has become 15,000. So what I'm trying to explain you is that while appropriating profit, not only we transfer profit to general reserve, but we may also transfer from general reserve to the profits. Have you got this, guys, to some extent or not?
No, sir.
What you have not
Yes.
understood?
सर अगर रिजर्व कम हो रहा है मतलब अपन ने ट्रांसफर किया है बट बढ़ रहा है तो मतलब
If in reserve is
I
increasing, it means from profit we have transferred to reserve. When reserve is decreasing, it means from reserve we have transferred to profits. See, general reserve is meant to meet any kind of contingency. So from reserve, general reserve, we can transfer amount to either statement of P&L or to any other reserves also. And that is what they have done here. They have transferred rupees 10,000 from general reserve to statement of P&L so that here we could have more profits for appropriation. Am I clear now?
and
Aman,
sir,
Akshita, are you understanding this or not?
Yes, sir.
Yes,
Sure?
sir. Yes,
Or
sir.
it's
Yes,
very
sir.
weird, something which is going out of your minds? I'm asking, guys.
No, sir. It's clear only, sir.
Okay, Akshita, what's about you?
Understood, sir. Understood, sir.
Okay, so if because of this we may have decrease in general reserve at the beginning or at the end of previous accounting year, general reserve was 25,000. Now the by the end of the current year, general reserve balance is 15,000. It has decreased by 10,000. Why? Because we have transferred 10,000 rupees from general reserve to statement of P&L. The same thing is happening here, guys. It is decreasing by 25,000. Now you know that to determine profit before tax, we have to do the calculations in reverse mode, right? So here we have been given information about provision for tax. Previous year's balance is 4,000, current year's balance is 4,800. There is no additional information about tax here at all. In that case, you already know what we do, guys. Recently, we have seen this. It means this 4,000 was paid during the year 1819, and this 4,800 was provided as tax for the year 1819, right? We saw it yesterday only, guys, in one question. Here we saw. So same thing I am using here. Provision for tax, beginning balance was 4,000 and the closing balance is 4,800 as given to us in balance sheet. 4,000 and 4,800 for provision for tax. And since we do not have any additional information about tax, we will assume that this 4,000 coming from the previous year was paid during the year. So this 4,000 we will write here for payment of tax, and this 4,800 was provided during the year. Now we will determine profit before tax. For this we will make the same statement but in reverse form. So first here we will take balance in statement of P&L as at the end of the year, that is as at 31st March 2019, and that is rupees 1,67,000 negative. So here we will write less transfer from general reserve, right?
yes, sir. And Also, there was a capital reserve in the question.
We will see later. Do not worry. First, let us complete this and then we will see that. So
Sure.
167 less 25, which is in negative, it will become 1,92,000. To this, from this, we subtract balance statement at the beginning of the year, which is again in negative 170. So what will happen here? Minus 192 minus 1,70,000 means minus 192 plus 170, and that will give us negative balance of 22,000. It means during the year 18 and 19, this is the amount of loss that we have incurred, loss after tax. To this, we will add tax provided for the year 2018-19. And tax provided is how much? 4,800. Correct? So this will give us, here I write profit or loss after tax. We write loss in brackets, and here it is coming in brackets, it means it's a loss. Now here we will write profit or loss before tax. Am I clear? So this
Yes,
would
sir.
be 17,200 in negative. It means profit before tax was minus 17,200, means it was loss. Now tell me, Anna, Abir, and Taman, have you understood this or not?
Yes, sir.
Yes.
Sure?
Yes, sir.
This I made only for your understanding as yesterday. This has nothing to do with this example, right? Now, what you should keep in mind is that when balance of general reserve decreases from one year to another, right? The difference of the two is actually subtracted from balance and statement of P&L as at end of the year. Here, earlier adding, we were adding what? Transfer to general reserve. But here we do not have transfer to general reserve. We have not transferred any profit to general reserve. Rather, we have pulled profit from general reserve. That is why we have subtracted it. Like if I show you previous examples, see, to the balance at the end of accounting year 23-24, we have added transfer to general reserve. But in our current example, to the balance in statement of P&L at the end of the accounting year, for which we have to prepare cash flow, we have subtracted transfer from general reserve. Here, less transfer from general reserve. So I hope guys you have understood the difference. Right, Anna, Taman and Abir?
Yes, sir.
Yes.
Yes, sir.
Okay. Now we will prepare these two accounts in our working notes, land and building account and accumulated depreciation account. We will write the opening balances first. Opening and closing balance. Opening balance of building given to us is 6,18,400 and closing balance is 4,52,000. We will also prepare accumulated depreciation account. Here also we will write opening and closing balances. Opening balance is 3,18,000 and closing is 2,13,000. Now we will put the information given to us an additional information, that is building costing rupees 3,43,000 was sold for rupees 3,65,000. This is the original cost of the building and this is the sale value. What is the WDV of the building, or what is the total amount of depreciation charged on the building till the date of its sale is not given to us. But what we have given is depreciation charged on building during the year 1819, and that is 1,02,000. So this amount 1,02,000 will go to accumulated depreciation account on credit side. So here we will write by depreciation account 1,02,000. After putting these three information, we will balance accumulated depreciation account. Credit side of this is more than the debit side. So we'll do the total of credit side and that is 4,91,000. The same we will write on the debit side. From 491 we will subtract 2,13,000 and that will give us amount of accumulated depreciation of that building which we have sold. Of that building which we have sold, we will get what? Accumulated depreciation amount. And that is 491 minus 2,13,000, that is 2,78,000. This would be transferred to land and building account. This is balancing figure. Have you understood this, guys, or not?
Yes, sir.
Yes.
I'm asking.
Yes, sir.
Right, Anna?
Yes.
Okay. So this 2,78,000 will go on the credit side of land and building account. Here we will write by accumulated depreciation account 2,78,000. This amount has gone on the credit side of land and building account. Now we have sold this land and building for rupees 3,65,000. Original cost was 3,43,000, right? So cost of the building sold is 3,43,000 less accumulated depreciation, that is 2,78,000, which we have just found, this one. So net WDV or net value of the building is 343 minus 272, that is 65,000. Correct, guys?
Yes, sir.
Yes, sir.
Sale value of the building is 3,65,000. It means profit on sale of building is rupees 3 lakhs. 365 minus 65, 3 lakhs. Where is 1 second? Right, guys, I'm sorry, it was an urgent call. So I hope you all have understood the amount of profit that I have determined, that is sale value minus WDV of the building, which is 3 lakhs here, right? I'm asking guys, is it clear?
Yes.
Yes, sir.
But see guys, you must be knowing that if we sell any asset where the sale value is over and above cost of the asset, original cost of the asset, the excess is considered as capital profit and that is created to capital reserve. So here the excess of sale value over original cost of the building is 22,000. 365 minus 343, 22,000. It means out of total profit of 3 lakhs, 22,000 is capital profit. And rest rupees 2 lakhs 78,000. That is 3 lakhs minus 22,000 is revenue profit. So this revenue profit of 278 has gone to P&L account, not the entire profit of 3 lakhs. Right? Out of profits of 3 lakhs, 22,000 has gone to capital reserve and 278 has gone to P&L account. And because of that, your capital reserve is increasing by 22,000 if you notice. Earlier it was 5, now it has become 27. So it has increased by 22,000 and that capital profit the company has earned by selling its one of the buildings at a value over and above its original cost. Those who were with me in class 11, to them I have already taught this guys in class 11th in the chapter provisions and reserves where we have talked about capital reserve. So in the journal entry for sale of this building, apart from building account, capital reserve account also has got created with 22,000 and P&L account has also got created with 2,78,000. So what has gone to P&L and what has increased our profits is 278. So this would be subtracted from profit before tax, not the entire 3 lakhs. This sale value will be inflow under investing activity that you know, right? So here we will write by bank account with the sale value of the building, which is 3,65,000. Here we will, on the debit side, write by to P&L account. It means profit and loss account is getting created and land and building is getting debited, and to capital reserve account. Profit and loss account is 2 lakh 78 and capital reserve is 22. So for sale of building, we have created these two amounts to land and building, and we have debited these two accounts to land and building. The net of these, if you see, would be credit of 343, which is original cost of the building. That is 278 plus 365 minus this will give you exactly 3,43,000, by which land and building account is getting created. Is it clear to you all guys or not?
Yes, sir.
Yes.
Abir,
Um, Sir, can you explain it once again?
no, why? What,
Sir, I have not.
which item you have not understood?
Sir, the
You understood everything till here, right?
Yes, sir.
Yeah. So total profit on sale of building is 3 lakhs. But since here sale value is more than the original cost of the building, excess of sale value over original cost is considered as capital profit, and that is 22,000. So that was created to capital reserve account, and the remaining profit, 3 lakhs minus 22, that is 2 lakhs 78,000, was created to profit and loss account, being revenue profit. And because of it means how much we have created to capital reserve, 22,000. Because of that, capital reserve balance has increased by 22,000 and has become 27 from 5,000. Clear now?
Yes, sir.
So now we will balance this account also. Here also the credit side looks more than debit side. The total is 5 and 9 lakhs. Then 70, 60, 130 and 180 means 10 lakh 80. And then 8, 5, 13 to 15 means 10 lakh 95,000. So here I have written on the debit side 10 lakh 95,000. The total of this is 8 lakhs, 18 and 70, it is 96, 96 and 22 is 1 lakh 18,000. So it would be 9 lakh 18,400. The total of these three. 16 to 18, 1, 8, 9 to 11. Yes. So 1095 minus 9 lakh 18,400 will give us an amount, and that is 1 lakh 76,600. This is the balancing figure. Since it is coming on the debit side of land and building account, it means we have purchased land and building of 1 lakh 76,600. Am I clear now?
Yes, sir.
Yes.
Yes.
Okay, so we are done with this also. The information that we have derived, we will use in our cash flow statement. Now, next is shares were issued for purchase of goodwill that we discussed yesterday. Our share capital in this example is increasing by 1 lakh, exactly 1 lakh. And this is the amount by which our goodwill value is also increasing. Earlier it was 0, now it has become 1 lakh. So there won't be any flow of cash for purchase of goodwill or for issue of shares. In intangible assets, we have also been given patents. Earlier, its value was say 45,000, but question says that we have purchased during the accounting year 1819 patents of 8,000. So its end value, that is year end value, must be 45 plus 853, but it is only 40,000. It means we have amortized patents of 13,000. 45 plus 8 minus 40. Amortization of patents would have gone to P&L, has decreased the profits, but since it is a non-cash item, that would be added back to profit before tax. Is it clear to you all, guys? I'm asking, is it clear about
Yes.
patents?
Yes.
Okay, debentures were
Yes,
redeemed
sir.
on 1st July 2018. Now here we have been given debentures. Earlier they were 2 lakh, now it has become 1 lakh. It means there is redemption of debentures of 1 lakh. When they were redeemed, the date of that is given to us. That is 1st July 2018. What is the use of this date? So that we could calculate the total interest payable during the accounting year 1819 on debentures. Right? So let's find that. Interest payable on debentures in 1819 is, earlier we had debentures of rupees 2 lakhs. They are carrying interest at the rate of 8% per annum. But these debentures of 2 lakhs remained till 1st July only, because on 1st July we redeemed debentures of 1 lakh. From 1st April 2018 till 1st July 2018, we have a period of 3 months. So on these debentures of 2 lakhs at the rate of 8%, interest is payable only for 3 months. And after that, on the remaining debentures, interest is payable at the rate of 8% for 9 months. So interest payable on debentures is on 2 lakhs at the rate of 8% for 3 months, plus on the remaining 1 lakh at the rate of 8% for 9 months. So this is 16,000 by 4 means 4,000. This is 8,000 into 3 by 4 means 6,000. So total interest is 10,000. This is payable. Means this amount of interest has gone to our P&L and has decreased the profits. We will add it back to profit before tax. Why? Because it is a financing activity and not an operating activity. Now out of this, how much interest we have paid? For that, we have been given under other current liabilities interest accrued and due on debentures. Means unpaid interest. At the beginning of accounting year 1819, it was 2000. At the end of the year, it is 1000. So we already had at the beginning of accounting year 1819, we already had unpaid of 2000. During the year, interest got accrued of 10,000, which we just calculated. So 10 plus 2, 12 we had to pay during 1819. But out of 12, one is still unpaid. It means we have paid only interest of 11,000. Clear, guys? So interest
Yes.
paid
Yes, sir.
during 1819 on debentures is equal to 2 beginning balance plus 10 that has got payable during the year minus 1, that is 11,000. So with this, guys, we have made all the working notes. Yes, we are done with that. Now we will start making our cash flow statement. This I have made only for your understanding, so I am marking this in blue. Cash flow statement for the year ended 31st March 2019. Profit before tax and extraordinary item is 17,200 negative, right? So we'll take 17,200 in negative here. Now add interest on 8% debentures, add depreciation on land and building, add amortization of patents. So depreciation on land and building is 1,02,000. Interest on debentures is 10,000. Amortization of patents is 45 plus 8 minus 40. That is 13,000. Less profit on sale of building. The only amount of profit which has gone to P&L, and that is rupees 2,78,000 being revenue profit. We'll subtract it, 2,78,000. Apart from this, what do we have here is okay. This portion is taken care of. In reserve and surplus, we had three items: general reserves, balance sheet statement of P&L, and capital reserve. They have well been taken care of. This part is also taken care of. Bank overdraft is part of financing activity. This will go under working capital changes. This also has been taken care of, and this will not go under working capital changes. Why? Because it is a non-operating item. This also has been taken care of. Tangible assets, we had land and building and its accumulated depreciation that we have taken care of. Here we had goodwill and patents that also we have considered. Now these two items are of working capital. This is also of working capital, prepaid rent. Because all these three inventories, trade receivables, and rent, which is our expense here, because we have paid it, all these three are operating items only. So this we will adjust under working capital changes. So now we have to do working capital changes. Before that, we will determine cash flow before working capital changes. It would be negative. So cash used in operating activities before changes in working capital, and that comes to 278 plus 17 200, that is 2,95,200. If I write it here, 295,200 minus 1,12, 1,25 minus 1,25,000. So 295 minus 125 means 1,70. So 1,70,200 is the negative amount. Right, guys? I'm asking you all.
Yes, sir.
Yes.
Now, for
Yes.
working capital changes, we will see the items of working capital. Here in current liabilities, we have only trade payables, which is increasing. Increase in trade payables or increase in current liabilities is added. So we will add trade payables by 8,000. We'll add it by 8,000. Then in current assets, we have inventory is increasing. Increase in current assets is decreased or is subtracted under cash flow from operating activities for working capital changes, and that amounts to 12,500. So less increase in current assets, and here we will take inventories with 12,500 negative. If current assets decreases, then we add it. So decrease in current assets, and here the item is trade receivables. And that is 32,800. From 32,800 has become 27,600. That is 5,200 is the amount by which trade receivable is decreasing. 5,200 would be added. We have prepaid rent also, and that amount of that is in decreasing by 300. So this also would be added. Prepaid rent by 300. With this, the total changes in working capital is 13,200, 13,500 in positive minus 12,500. That is 1,000 positive. So now cash used in operating activities after changes in working capital is 1,70,200 negative, and 1,000 positive means 1,69,200 negative. Right? From this, we will subtract less tax paid during the year, and that amounts to rupees 4,000. That is previous year's provision for tax. The net cash used in operating activities, that is A is 1,73,200 negative. The same amount we will write here in the outer column. Clear guys or not to everyone? Abhi, Rana
Yes.
and Kaman.
Yes, sir.
Yes, sir.
Now cash flow from investing activities. Here we have purchase of building, land and building. We have sale of land and building. And we have purchase of patents. We have purchased land and building for 1,76,600. We have sold it for 3,65,000. And we have purchased patents of 8,000. This is given to us in additional information. This one. right? Apart from this, we do not have any other investing activity. Here we have net inflow. So net cash flow from investing activities, that is B, is 365 minus 176, 184. That is 1 lakh 16, 1 lakh 81. So it would be 1 lakh 8400 in positive. Mm, Just a minute, let me check it. 365 minus 176 600 minus 8000 180 400. Yes. Now cash flow from financing activities. In this we have redemption of debentures. Earlier debentures were of 2 lakhs and now they have become 1 lakh. It means we have redeemed debentures of 1 lakh and this is an outflow of cash, and interest paid on debentures is rupees 11,000, which also we have calculated. We have one more item, that is bank overdraft. This is interest paid on debentures 11,000. Yeah, here we have been given in question bank overdraft under short-term borrowings. Earlier it was zero. Now it has become 1,16,300. It means we have raised bank overdraft of 1,16,300. So it is inflow of cash. One lakh 16,300. Right, just let me confirm the amount. Yes, 1,16,300 it is. So net of this is 1,11,000 minus 1,16,300 means 5,300. So here also we have net cash flow from financing activities marked as small c. So with the net of these, we will get net amount of cash flow. That is 180,400 minus 173,200 is 7,200. 7,200 plus 5,300 is 12,500. So net cash flow from A plus B plus C is 12,500. To this we will add opening balance of cash and cash equivalents, and that is cash in hand and cash at bank only we have here. We do not have current investments at all, which is 27,400. So 27,400 plus 12,500 is 39,900. Since it has matched, it means our cash flow is correct. Clear, guys, everyone?
Yes.
Abir, Taman, is it clear?
Sir, I had a
Yes.
doubt.
Yeah.
Sir, if the patents are in the investing activity, we are subtracting the patents, so in the operating activity, like will it be added or
Yes, we have added it. Amortization of patents. And this 8,000, which is the purchase of patents during the year 1819, that we have taken as outflow under investing activity. Correct?
okay, sir?
So, guys, now you have to start noting it down from here. Everyone, please do this little fast. I hope, guys, you all have noted down this much, right?
Yes,
Yes.
sir.
Yes, sir.
Have you noted down this also, guys?
Yes, sir.
Taman, Ahana, done with this?
Yes, sir.
Yes.
Okay.
Yes, sir.
Yes.
Taman,
Yes, sir.
and this part?
Yes.
Okay. Okay, so guys, now note down this.